Will the stock market dive on the lockdown and restriction news that we're seeing across the country at the moment?
It's interesting, Danica. How are you? Look, if you look at the SPY is like a pre-opening stock market indicator. It suggests that the market will be up. Now, that will be driven by the Wall Street news over the weekend, which was very positive. Now, it's possible that the market will fall today. But the interesting thing about lockdowns is that some stocks lose and some stocks gain. So you expect companies like Qantas and Webjet to lose ground today. But on the other hand, companies like Kogan and Temple and Webster and other online companies, they'll go up. So it's going to be 50-50. I suspect there will be a bit of negativity because New South Wales is the biggest state in the economy. But this is only a 2-week lockdown. And even during the period when Victoria went in their extended lockdown, their second one, the stock market kept rising. So I wouldn't instantly say it's all going to be bad news for stocks.
And obviously the latest lockdown in Victoria is said to have a significant impact on businesses there, but the state's actually set to be the star grower this year. Why is that?
Yeah, it's a crazy one. It's a bit biblical, isn't it? That the last should be first. That Victoria, you would have thought, would struggle. But what's really interesting, Danica, is when an economy really suffers, as Victoria has compared to other states because of their lockdowns, all those businesses that have struggled, when the lockdown is taken away, they then rebound. And so Westpac has looked at the economic growth of Victoria next year, put it in at 6.3%. That is like an unbelievably big number. New South Wales, on the other hand, is going to be more like 3.3, half that number. So the interesting thing is going to be that because Victoria suffered in 2020 and 2021, they're going to have a really good year in 2022.
Yeah, extraordinary. It's hard to believe that after everything that state's been through, but very good news on that front. Peter, banks alleviating pressure on borrowers, that could hit their share price.
Well, that is the downside of them behaving really nicely. Now, we did see that bank share prices fell during 2020 because of their recruitment by the federal government to actually help the economy. Now, since the economy has looked fantastic and the lockdown fears have really dissipated, their share prices have absolutely rebounded. Now, look, I don't think a 2-week lockdown in New South Wales, in Sydney, more correctly, is going to seriously affect bank share prices. But they could come off the boil a little bit, which probably could be a buying opportunity for many people out there. But what's critically interesting is that the banks have actually volunteered to help those businesses and those borrowers who are really being negatively affected by the lockdown, particularly CBD businesses. They're the ones who are really going to struggle over the next 2 weeks.
Yeah, they're saying $1 billion a week to the economy in New South Wales. Peter Switzer, thank you for joining me.
My great pleasure.